Stage 1 is what Minsky called displacement. Something in the world changes, like a new technology, a war ending, a central bank cutting rates. The change creates a real opportunity to make money on something that didn't exist before. In the 1990s, the displacement was the commercial internet. In the 2000s, low mortgage rates. In the 2020s, near zero interest rates plus pandemic stimulus. This part is rational, the story is true. Stage 2 is the boom. Early investors make money. Other people notice. New buyers come in, prices rise, and critically, at this stage, the rise is mostly justified. Internet companies really were going to change commerce. Houses really were a good investment in 2002. Bitcoin really was a working monetary system. The fundamentals support the price. The story still holds. Then comes stage 3. Euphoria. Prices climb faster than anything in the underlying business can justify. People who've never bought this kind of asset before start buying it. People who can't afford to lose money start borrowing money to buy it. And the phrase that gets repeated in every euphoria phase across history is some version of "this time is different." This is where the smart investor's discipline tends to break. The numbers don't make sense, but the prices keep rising, and watching everyone else get rich is harder than it sounds. Even Isaac Newton sold his South Sea shares for a profit early, watched the price keep climbing, bought back in near the top, and lost most of his fortune. Stage 4 is harder to see while it's happening. The investors who've been in the market longest start quietly selling. Prices keep rising for a while because new buyers are still arriving. But underneath, ownership is shifting from the people who got in early and know what they're holding to the people who showed up late and don't. And then stage 5, panic. Sometimes there's a clear trigger, a bank failure, a regulatory change, a piece of news. Sometimes there isn't. Confidence breaks. Selling becomes rational. And then it becomes mandatory because investors who borrowed to buy are getting margin calls and being forced to sell whether they want to or not. The asset that was supposed to make everyone rich destroys most of the wealth it created. Sometimes in months, sometimes in days, 5 stages. They've shown up in every one of the 40 manias I tracked. They'll show up in the 41st. There's a line in the book of Ecclesiastes, written something like 3,000 years ago, that reads, "What has been will be again. What has been done will be done again. There is nothing new under the sun." Whoever wrote that had never heard of Wall Street or Bitcoin or speculative manias in any form we'd recognize, but they would have understood the curve. On this channel, I'm going to trace patterns like this one across history. Empires, currencies, monopolies, generations, debt cycles. If you want to see how it all connects, subscribe.